Welcome back. I'm Pratap here. Today is the 28th March 2024. In this video, let us evaluate the performance of high liquidity zones generated in our yesterday's report. Even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training videos are available at our NeoStock YouTube channel. I kept all the videos in a playlist supply demand zone price action course. Even I have provided the link to this playlist in this YouTube video description. If you click the link, you will get into this page and then scroll down to the bottom of this page. Here, starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. Even I have provided the link to our Telegram channel in this YouTube video description. Please join in the Telegram channel. It will be useful to you. Each time when we release a new YouTube video, we will provide an update in the channel. Now let's get into the analysis of high liquidity zones generated in our yesterday's report. Yesterday we identified 6 high liquidity zones. 7 high liquidity zones. So yesterday we have identified 7 high liquidity zones from daily time frame and 75 minutes time frame. Out of these we got only one trade today, and one trade is stopped out, that is Nifty 50. Actually it is not stopped out, it is violated. We already identified the zone will be violated. Couple of days back also we have discussed Nifty 50. At the time I explained you how I fine-tuned the zone. So because at lower time frames the zones are already tested, so I told this zone will be violated. That is what happened today. We will discuss these scenarios. First let us look into the Z Limited trade. It is a 75 minutes high liquidity zone. This zone is created in the year 2020. Because TradingView is not having old data for 5 minutes and 15 minutes time frame, so we cannot fine tune this zone. But the recent price action created a new 15 minutes and 5 minute zones. That way we got a trade today. So this was the recent price action. In this price action, a 15 minute zone was created. Let me go to the 15 minutes time frame. Check here. We have a drop candle, 2 base candles and a rally candle. This is the way we have drawn this 15 minute zone. Inside 15 minute zone, previously we have identified a drop, a base candle, a rally candle with a hidden body. This is the way we planned a type 3 trade earlier, previously once. So at the time prices entered into this zone and gave a very big move. Now what we did, we again identified a zone. We can say this is a leg candle, or maybe even this one also you can consider a small, medium size, but this is a big candle. But still, the reason why we are considering the zone, the leg out structure is very, very excellent. And moreover, within this area the zone is created. Probably same area, if again and again they are creating the zones, probably it indicates in this area the liquidity is high. And moreover, see the wick. In this wick area, definitely order flow will be there. So that is the reason why again we planned a trade in this wick. So if you delete this order flow creation is again started from here only. So this is the origin from where again and again institutions are creating. So that is the reason why you can plan again a trade. Maybe you can keep stop loss up to here or extend till the more previously created zone low. That is the way you can create a trade. But here we have already having a 15 minutes supply zone as a target zone. We have a rally, base and medium size candles you can include, and a drop. This way you can consider. Actually this is a 5 minutes. If you go to 15 minutes you will get clarity. We have a drop, 3 base candles and a drop. That way this is your target. But here you have a problem. The problem is RR. If you consider this zone proximal line, you will be getting only 2.6 RR. At least if I want to make it 1:3 RR, so you have to take the help of trading view tool long position. Here we have a long position and short position. Previously also I explained about them. Long position and short position. Even our training lessons also I explained how we can reduce the risk with the help of this. So what I did, I just reduced the risk. Instead of top, how I reduced in such a way, I get at least 1:3 RR. See here now, the risk reward is 3, now exactly 3. So that means my entry level I changed. Instead of taking my entry level, if prices come a little below, I want to take a trade here. Let me zoom. Instead of taking here, a little below I want to take. You may ask a question, suppose if prices did not come and again if they go up, anyway you will be missing the trade. The reason is RR is not there up to here. Anyway you have to reject the trade. If the prices come a little below, you get an opportunity to take a trade because you are getting a minimum 1:3 RR. So that is the reason why using the long position, I just moved the long position. See here, instead of taking entry here, what I did, I slightly moved it in such a way I get 1:3. See, the moment I placed here, getting the reward as 3, 1:3. Now what is my idea? If prices go below this line, below this value, which value here, entry value, it is suggesting to get 1:3 RR, the entry price is 138.80. If price is 138 rupees 80 paisa, then only I will take my trade. Otherwise I don't take. So prices came a little even below. What is the low of this candle? Up to 138 rupees 65 paisa the prices came down. But we would have taken, we took our trade at a little above. That is 138 rupees 80 paisa. So our trade will execute definitely here. And the moment it reached the target, you get 1:3 RR. So when you got the trade at 13:25 minutes candle, when it reached the target 13:40 candle, in 15 minutes the trade is completed. It reached the target and you achieved 1:3 RR. This is the way Z has given a profit 4,050 rupees. But ROI is less compared to our average intraday ROI for high liquidity zones. The ROI is only 2%. The reason is the 15-minute zone, target zone is very near to our entry. That's why we didn't get enough 6.1 average ROI. But intraday point of view, 2% is a very good return. High liquidity zones point of view, it is a less return. Because our average ROI for high liquidity zones is 6.1. The only reason why we didn't get a good reward today is the 15 minutes target zone is somewhat close to the zone. So that's why we got only 1:3 RR. But many times high liquidity zones will give you some 1:8 RR, 1:7 RR, or even more. That way we are achieving 6.1% ROI for high liquidity zones. But today institutions created the 15 minutes target zone very near to the entry zone. But at the same time we don't want to miss, because today none of other trades got a trade today. This is the only one opportunity we got. When you get the opportunity, you should not miss it. You always should know how to make use of the opportunity and grab the money. If you are simply rejected because you didn't have sufficient RR, you would have missed this trade. Don't do that. How to adjust your risk and get maximum return also is one skill you have to build. This is such kind of skill. For that, trading view, long position is helping us. This tool, long position and short position, they always help. First you draw the zone. From distal line to proximal line, you draw the zone. After that, slightly adjust that until you get a minimum RR. That is what I did, as I explained you earlier. Even yesterday also I have given, I think yesterday also we took a trade, I forgot the name, which stock it is. Yeah, L&T Infotech Mindtree. We did the same. There also we have slightly less RR. Exactly the same way we adjusted, prices entered into that zone, then we took the trade. Today also we did, prices entered till the adjusted area, that way we got the trade. Sometimes you miss the trade, you have to accept. Even if you don't adjust, you won't take the trade because RR is not there. If you adjust, at least if prices come to that adjusted area, you get a chance to take a trade. That is what happened yesterday and even today, and ultimately we got some profit. See, these kind of adjustments you have to take when your target zones are very near to your entry zone. At the time only you have to do such kind of adjustments. Okay, we got the entry. After that again, during the last half an hour, at almost closing hour of the market, again prices entered, but this time it is violated. Generally, okay, at least last 1.5 hour, we can take a risk. Yesterday we did that. Last 1.5 hour or 1 hour 20 minutes time. Yesterday, L&T Mindtree, it entered into the zone. We took a trade, a last hour trade, last 1 hour trade. But this we cannot take a trade because it almost last 30 minutes. Taking trade at last 30 minutes is quite risky. And moreover, already we took a trade. And also prices came a deep also, a little deep inside this zone. Taking again trade below this, see in this candle it came. 2 o'clock 55 minutes. So you can't risk at the last minute of the last 30 minutes of your trading session. That is very highly risky. Anyway, the zone is violated after that. So this is about Z Limited. And next one is Nifty. The zone is violated today. But he entered into the bull trap a little above that. See, there was a bull trap a little above this zone. Actually, I talked about this bull trap in Nifty analysis video. Last Sunday or Monday, we had a weekend analysis video. In that weekend analysis video, I talked about this bull trap. In case if this zone is violated, mostly institutions, they capture all the long orders and then they take the trade. Why we are saying long orders? Because in the supply zone, people would have taken a lot of short orders. The moment the supply zone is violated, what they do? They will start exit from the trade. How do they exit? By executing long orders. What institutions will do? In this trap area, they will consume all the orders, long orders, that is stop loss orders, and finally they will push the market down. See today what institutions has done? Prices entered into this zone in this candle, 1410. Then they keep on consuming all the long orders in this area. 1410 candle, 15 minutes candle, 1420 minutes, 1425 minutes, 1430 minutes, 1435, 1440 minutes. See, in this area, a lot of time, whatever the long orders, they keep on absorbing. But today, you know, the market is, how strong the market is today. Let me show you in the daily time frame. Yeah, okay, daily time frame we will see. See here today morning from here how market went up. It was going, such a strong, huge strong. But in this zone, what they did? They observed all the institutional orders, even the stop loss orders. Because the buying pressure is so strong today, this zone is slightly pierced. Which one? This bull trap area. Prices went a little above that. But even then, institutions, they didn't stop. They observed all the orders. That is what we are seeing in this 5 minutes time frame. Even the prices went slightly above this 15-minute zone. And they observed all the orders and then they pushed. See how many points they pushed the market after that. From 14:40, 5 minutes candle onwards, they started pushing and then see the selling pressure all of a sudden. For moving from here to here, from here to here, it took so many hours. At what time it is? 10 o'clock 30 and this is 14:40, say 14:30. Nearly 4 hours time it took to reach from here to here, to reach the price. It took 4 hours time. But here from here to here to reach, it took only 10, 15, 20, 25, 30, 35. Only 35 minutes time it took. Here it took 4 hours time. Here it took only 35 minutes time. See the difference? That is what happens when bears enters into the market. That's why in our last Sunday's Nifty weekend analysis, that is a detailed analysis, we spotted this. At the time in that video I told, in case if this zone is violated. But anyway, we know this zone is violated. Mostly institutions will trap all the long orders in this zone. That's why we called it as a bull trap. All the bulls are trapped here. All long orders institutions captured and pushed the market. How many points they pushed? And here somewhere 22,270 approximately. And here 22,505. Some 230 points move from here to here. And anybody took a trade inside this zone and kept your stop loss a little. Actually, no, even if you keep 15-minute stop loss, slightly, just 10 points, slightly again it moved up. If anybody exited, after that see market how. Volatility is very high in the market. Generally, we need to adjust a stop loss a little higher. Do you remember in stop buffers concept video, the last video, the stop buffers, I clearly explained the 5% ATR value, 3% ATR value, they are the minimum value. They are the minimal, they are not the final, they are the minimal value. Sometimes you need to extend if the volatility of the market is very high. Sometimes, maybe another 10 points or 15 points, you should further extend because the volatility is very high. If that is the case, you would have captured a very good move here. In 35 minutes, 230 points move. See, bull traps and bear traps are such a strong concept. We should properly detect them. We have identified because of such a huge buying pressure today, even the bear trap is also slightly pierced. And after that, again institutions created and that means they completely captured all the long orders. And there are no more long orders. Institutions created a new zone, again a rally based drop and pushed the market, pushed the Nifty down. Okay, why this zone is violated? Because we already 2 days back, we already discussed this chart. But anyway, let me show you once again. Inside the daily, we identified 75-minute zone here. This is the 75-minute zone. We have a drop candle, 3 base candles and drop candle. And within this area we have identified 15-minute zones. 2 15-minute zones we identified. This is a rally, 3 base candles and drop, and here drop, base, drop. And within these 15 minutes we again fine tuned with 5 minutes. Look into these 5 minutes. We have a drop, base and drop candle. After that, prices entered into this zone. Anyway, you can consider them as a rejections. But see, after that, they went down and again came and again captured. So this zone is already tested. So that's why it's quite risky to trade in this zone again. If anybody would have traded, see how today this zone is violated. That's why once the zone is tested, we won't take a trade. And moreover, this is not a high liquidity zone, because already we have seen analyzed in the Nifty analysis video. Our software did not identify this zone as a high liquidity. And again here, we have a rally candle, 1, 2, 3, 4, 5, 6, sorry 5, 1, 2, 3, 4, 5 base candles and a drop candle. See here, prices entered. Moreover, prices entered more deep, very close to the digital line, and then came down. That means this zone is also tested. So that's why last time what we discussed 2 days back, mostly this zone will be violated because order flow is not good. When this zone won't be violated, if institutions again decide they don't want to violate, inside this again they create a new supply zone and push the market down, probably it won't be violated. But a little above there is a bull trap. By seeing the trap, already I got a doubt. Mostly institutions will violate this zone because we already identified the reasons behind why this zone will be violated. Many people who are not aware of when a zone will be violated, those concepts, generally what those people will do, they will place their orders here and all their orders will be stopped out. Their short orders will be stopped out. So they will exit with long orders. Those long orders institutions will capture in this trap. So that's why in the last weekend analysis video I talked about this trap. See, today both these zones are violated easily. This is the one easily violated, and even this is the one violated. After that, in this trap area it is struggled. Prices are, the bulls are struggled here, and finally base took the complete control and pushed the market down. So this is what happened in Nifty today. Those who took short orders in this bear trap area, you would have got a very good profit. Because I am not considering for our high liquidity zones. Generally we consider bull bear traps because this is pierced. So I am not considering this. So anyway, this is Nifty and remaining stocks. We have Balamur Chini. We have, this is a daily zone. When this zone is created, 15th November, maybe this is the one I should explain to you, because the next time you will get a trade opportunities. We have a leg candle. This is what software considered leg in. 1, 2, 3, 4, 5, 6 base candles and a rally candle. This is the way we created the zone. But when this zone is created in 24th November 2022, and the problem is with the TradingView is not having 5 minutes data. For the year 2022, TradingView is supporting 15 minutes data. 5 minutes data is not available. But from 2021 onwards, we have 5 minutes data in our database. I mean, intraday data is available in our database. So that's why with the help of supply demand zone chain for this particular stock, I have identified 5 minute zones. And interestingly, one high liquidity zone is also there inside this. High liquidity 5 minutes demand zone in the fine-tuned area. So we should not miss the trade. I have drawn this zone. I will show you in the 5 minutes levels. I will show you, so that you can also mark in your charts. If next time, again, if it gets a trading opportunity, definitely you can plan a trade. Okay, first of all, this is the one we fine-tuned with 75 minutes. How we fine-tuned with 75 minutes, let me explain. See here, we have a rally candle, 2 base candles and a rally candle. This is the one. And another one is, we have a leg-in, ERC candle as a leg-in. You have 3 base candles and a rally candle and follow-through candles are there. This is the way. Another 75 minutes. Inside 75 minutes, 15 minutes we fine-tuned. But 5 minute zone is not there within this area as per the software. So that's why I didn't fine-tune at 5 minutes. I just left it. That means in this 75 minutes area, we cannot plan any trade. So I went to the 15 minutes time frame. Inside the 75 minutes, how I fine-tuned the 15 minutes? Let me show you. Let me explain. We have two 75 minute zones, right? This is the first 75 minute zone, and here we have a 15 minute zone drop, 1, 2, 3, 4 base candles and a rally candle, drop base rally. This is 15 minutes area, and here again you have a drop base rally, but according to the software we didn't identify, but manually sometimes we may identify a zone in the inside this, because software is very strict. If the parameters it met, then only it will list the stock. But we human, what we do, sometimes we slightly compromise and we take the zones. Software won't compromise because we defined a strict rules. Because the data is not there, whether we can compromise and draw a 5 minute zone, we don't have an idea. So that is the reason why we are leaving this trade in case it prices. But before that, we have trade opportunities are there. The first trade opportunity we will see in the 5 minutes time frame. Sorry, 5 minutes time frame data is not available. We can't go there. So what I did in 15 minutes, I have drawn the zones as per the suggestions given by our software. Here we have two 15 minute zone. This is one 15 minute zone. This is not high liquidity, normal zone. These are the levels. These are the coordinates of this zone. And this is the proximal line. And this is the distal line. The 343 rupees 40 paisa is the proximal entry. 340 to 75 is the distal line. This is a normal demand zone, but fine-tuned demand zone. Fine-tuned demand zone is within high liquidity zone. I repeat again, fine-tuned 5 minutes demand zone, which is fresh, which is inside high liquidity zone, is a powerful zone. Always we place our orders. Once it is tested, it is no more a powerful zone. Once it is tested, you have to delete that zone. That means you need not plan any trade in that zone. And it is a fresh zone. This rally base rally is a fresh zone. Actually, this is the one you have to draw exactly here, because the coordinates I shown you. These coordinates, according to these coordinates, you have to draw. What I did, I just drawn a zone randomly here, and after that I went to the coordinates. Whatever the software has suggested, those coordinates I filled here, and I click. The moment I click, automatically zone will adjust. And the second one, this is a high liquidity zone, and it is created from here and overlapped with 75 minute zone, and also overlapped with the fine-tuned 15 minute zone also. We have a 75 minutes inside 75 minutes we have 15 minutes. Inside 15 minutes, this is the first 5 minutes and this is the second 5 minutes. And this second 5 minutes is a high liquidity zone. That's why it's supported. It's already tested once. Again, second time it is tested. Even third attempt also we can plan our trades in this area. But this is the area I didn't fine tune with 5 minutes. See, this is 15 minutes zone. Inside we didn't draw 5 minutes because software did not provide any zone inside this area. Maybe there might be a slightly compromised, we can draw a 5 minutes demand zone. If the human convince, human means we. If we convince, we can draw a zone. But anyway, we can't have data. So these are the reason why I am moving, just to show you they are fresh zones. They haven't tested yet. And recently, see here, prices came very near to this zone. This is not tested. Came very close. See the rejection, huge rejection. Definitely, we can plan a trade in this zone. There are a lot of strong order flow is here. But unfortunately today, prices did not come to this zone. So we didn't get an entry today. Next one is SIPLA. SIPLA is also a daily high liquidity demand zone. See here we have a drop, 2 base candles and a rally. Already prices came once. And again second time they came very near to this area. And within this area again a new zone is created. How they are created we will see by fine tuning. This is a daily zone. Now let's move on to 75 minutes time frame. In the 75 minutes we have identified a drop, 3 base candles and a rally and follow through candles. Previously prices came to this 75 minute zone, but they didn't go up to fine tuned area. So then we are going to 15 minutes time frame. In the 15 minutes time frame, inside 75 minutes, we identified a drop candle, base candle and a rally candle. This is the way we have drawn 15 minutes. Several times prices came. And see here, this zone is already tested here. It is tested. Which one? The fine-tuned 5 minutes area. Let me show you the fine-tuned 5 minutes area. So this is how we fine-tune. We have a drop candle. We have 2 base candles, rally candle and a follow through candle. But it is already tested. But observe carefully. While testing, what happened? Again a drop, base, rally is created. It picked up the orders and created a new zone within. That means this zone is again valid zone. And again you see here, we have a leg candle here, 2 base candles. Again this rally candle picked up the orders from this zone and created. That means institutions again and again they are creating zones from this area. That means this could be a high liquidity. I am not saying this is a high liquidity. This could be a high liquidity zone. Because again and again zones are created. Not only here, and one more test it got into this zone. Let me show you. Yeah, here. This is recently near to this zone, but prices did not get up to here. But here a drop, 4 base candles and again a rally candle with hidden body, rally candle. This is the recent price action. That's why we can plan a trade in this zone also. So one of these zones you can plan a trade. Why I am saying one of these zones? The previous test also a zone is created from here. That means still the order flow is active here. And a little above one more zone they created, 5 minute zone. Suppose if the first 5 minute zone is violated, failed, now definitely the second one will work because it would have already consumed a lot of order flow. Or the first itself will give you a good success, successful trade, because this is there inside the 15 minutes zone, fine-tuned area. This 15 minutes is there inside 75 minutes area. This 75 minutes is there inside the daily area. This is what our fine-tuned technique. But today prices did not enter into this zone. We didn't get a trade. Maybe next time again prices will enter into this zone. At the time this analysis will be helpful to you to plan your trades. And IRCTC is the next one. IRCTC is already we discussed. Some 3 days back or 4 days back, I explained you how we fine-tuned this zone. But today prices did not enter into this area. Please refer few days back HLQ analysis video, not yesterday. Yesterday also this stock listed, I didn't explain because I explained some 3 or 4 days back, I explained IRCTC. So I don't want to waste your time again by repeating the same discussion. On that day, whatever we have drawn, same thing still holds good. Prices haven't entered into this zone. Next one is Apollo Hospitals. This is a This is a 75 minute zone. And it is having both demand and supply zones. I think Apollo Hospitals also explained to you either in our yesterday's video or day before yesterday's video. I didn't remember. This is the one we already discussed. But anyway, I didn't remember. I will explain. We have a drop, base candles and a drop and follow through candles. This is what suggested. And this is also already having a demand zone also. Drop, base, rally. And this we fine tuned with 15 minutes time frame. In the 15 minutes time frame, we have a drop candle, 1, 2, 3, 4, 5 base candles and a drop candle. This is 15 minutes zone. And here also 15 minutes demand zone, we have a drop, 1, 2, 3, 4, 5 base candles and a rally candle. At the hidden body, it will become a rally candle. And inside again we fine tuned with 5 minutes. See, we have a rally, 4 base candles and a drop candle. And prices already tested this zone, again tested. While testing, it created a new zone again, new zone, rally, base, drop. And earlier prices came near to this fine-tuned this zone, but they didn't reach. But after that, there is a rejection, prices came down. And again here what happened, a new zone is created, rally, base, drop. See, the last time this rejection is from this zone. Still this is active. So maybe we can plan again a trade here. This is a fresh zone. This is a tested zone. Inside tested, again a new fresh zone is created. Probably this could be a high liquidity zone. Maybe. I'm thinking, I'm not sure. There is a possibility. So that is the reason why we can plan a trade. And previously also see, prices came near, but it didn't enter into this area. And see the rejection. That means there is a strong order flow in this area. And today prices didn't enter into this area. So we didn't get a trade. Same way the demand zone also, see here. Here we have a drop, 3 base candles and a rally with hidden body. It looks like a drop candle. If we add the hidden body, it will be a rally candle, ERC candle. A ERC having a sufficient body. ERC candle having sufficient body, you can use as a leg out candle. If it is not having sufficient body, you cannot use it as a leg out candle. Okay, this is about Apollo, how we fine-tuned both demand and supply zones. Next one is PEL. PEL is a 75 minutes demand zone. So we have this is the rally candle by adding the hidden body, 3 base candles, I think 2 base candles, not 3, 2 base candles and a leg out and follow through candles. And inside this zone, we fine tuned with 15 minutes. See here we have a ERC candle as a leg in, 2 base candles and a rally candle. And within this 15 minutes again we fine tuned with 5 minutes. We have a drop candle, 2 base candles and a rally candle. I think I made some mistake. Drop candle is having low value compared to this candle. Okay. So this is the 5-minute zone. But look into this 5-minute zone. Already it seems they are tested, but small gap is there. That's why you may consider one more. You may consider, I'm saying. Those people who feel this zone is already tested, leave it. But those people who consider, because they came and see the next candle, immediately how it moved up. If you combine both these candles, it looks like a rejection here. So that's why strong order flow is there. So my idea is nothing wrong in taking one more. There is nothing wrong in risking this zone again. Next time when prices enter into this zone. And Z already we discussed. That is the only trade we got a successful trade today. So this is the analysis of the high liquidity zones generated in our previous report. Hope this information will be useful to you for our further study and analysis of these zones. Let us all meet again in our next video. Thank you.